Call at 514-738-4100 extension 200. And now, back to the Money and Business Show.
We're into the clubhouse turn, headed down the home stretch, and we have another guest on our show. Sam, it's Mr. Yes. John Liang. He's going to answer a question. Is the Chinese real estate bubble? What's going on with it? Mr. Liang is currently Chief Financial Officer of China Wumei Real Estate Incorporated, a real estate development company based in Guangdong, China, and is also a U.S. public company. And he has broad experience in real estate finance, investment, development, both in China and the U.S., and has previously held senior management positions at U.S. public and private real estate companies, including a publicly traded REIT, a national supermarket chain, and a regional commercial real estate developer active in New York metropolitan area. Mr. Liang is also partner of a real estate opportunity fund that helps Chinese investors invest in the U.S. real estate market. He was college educated both in China and the U.S., has earned his MBA in finance from the Wharton School of Business, University of Pennsylvania, and a bachelor's degree in architecture at the University of Arkansas. He's also a licensed architect. Go ahead, Sam.
Yes, how are you, John?
I'm fine, thank you.
Good. I just want to say it's the first time I do a real estate show, but out of from China. So we don't know much about. Do you know anything about Chinese?
No, just what I pick up generally on the news and the Wall Street Journal and stuff like that.
Right. And I want to thank you for taking time off. John, the current state of the Chinese real estate market. What are some of the current trends right now?
Well, as we all know, China is experiencing probably the greatest wealth creation process in modern world history. I think the Chinese real estate market today is supported by two pretty significant trends in the demographics. The first one is the emergence, for the first time in the country's modern history, the emergence of a middle class in its true meaning. And this fast-growing middle class with increasing purchasing power is very eager to upgrade its living standards. The second trend, I think, is the great urbanization process that is taking place there. Right now, China's urbanization rate is only about 45% of the population, compared to about 80% in the U.S. At current rate, China urbanizes about 15 to 20 million people annually and requires approximately 6 million housing units each year. Which doesn't even include urban citizens' upgrades from the Mao-era Soviet-style housing units to modern housing. So, to put the 6 million per year number in perspective, the entire country of France has about 18 million housing units. So China needs to build France within 3 years.
Wow.
I think demand for housing will remain high, because the rural to urban migration will send another 300 million people to China's cities by 2025. This is according to a recent research by McKinsey.
So,
in terms of trends, there are three pretty distinct housing markets segments in China. The high end in major tier 1 cities such as Beijing, Shanghai, Guangzhou, they get a lot of negative press, including the bubble press, due to some of the high speculative activities in those cities. On the lower end of the scale, social housing is promoted by the government and much hyped, but very slow to catch on. Yet, people need to realize that the middle-income mass market in Tier 2, Tier 3 cities is where the action is. For example, our company's focus is exactly on this middle market in Tier 2 and Tier 3 cities, what we call the real housing for real people. I think that's what we need to focus on.
So, okay, let's go back here. So for Western audience, let's say we're a Western audience here who don't know much about the Chinese economy or Chinese real estate, can you point out some of the differential characteristics or nuances, I would say, of the Chinese real estate market? It can't be perfect, right?
Sure. I can talk about some of the things that immediately come to mind. One of them is almost a propensity towards owning rather than renting real estate, which is true in both the residential and commercial markets. In the commercial market, for example, the notion of a sustainable income-generating, yield-driven investment and ownership model, which is widely used in the West, it is still in the early development stage in China. To be sure, the REIT model, for example, even in North America, has only come to existence over the last 20 to 30 years only. But in China, I think short-term and turning a quick profit kind of mentality is still pretty prominent, which is a reflection of the overall stage of economic development of the country. Most real estate players tend to sacrifice the upsides of long-term income-generating capital appreciation for short-term, one-time profit, and they move on to the next project. Frankly speaking, most of the real estate developers are still in the merchant builder model rather than operators and investors that truly realize the intrinsic value of real estate. That's why you will see most commercial properties in the Western world are owned by long-term, income-producing and institutional vehicles such as public or private REITs or pension funds, etc. Yet in China, it's a common that various portions of a mall or office building, for example, being bought by different retailers or users, and the developer rarely stay in for long after the completion. Multifamily is another example. The multifamily REITs have been pretty hot in the U.S. In recent years, definitely not in China. This actually presents, I think, a pretty good opportunity because eventually a transformation towards this institutional real estate is inevitable. And so far, the Chinese lack the related asset management expertise and infrastructure. Just give you another example on the residential front. Take New York, for example. Even if you are a reasonably wealthy person, it would not be uncommon to live in a rental apartment and without a car. But if a man living in Beijing without owning both a car and an apartment, you simply can't get married. Another key difference that comes to mind is the fact that all land in China is owned by the state. So when someone buys an apartment in the U.S. or Canada, it includes the land underneath the building. But in China, it's simply a 70-year ground lease from the government, or so-called land use rights. All the developers acquire land use rights in public auctions, where local governments monetize the state-owned land use rights to finance themselves. The flip side is that in most cities there is no property tax, but the Chinese government is in the process of reforming the property tax codes. But I think they still have a ways to go.
John, I know there's a popular perception worldwide, including Charles Nanner, who was just on, there's a problem in the Chinese economy. He thinks also there's a real estate bubble in China that's ready to burst. What would you like to say about, we have a couple of minutes left, about, based on your experience, what's on the ground in China?
Yeah, I think a handful of major Tier 1 cities, such as Beijing, Shanghai, the real estate market has become a national market or even international market. So the prices did increase at a faster pace than local residents' disposable income, or the price to income ratio, which is part of the what we call the Case-Shiller affordability model, is showing a fairly steep curve. So I think there are certainly pockets of bubbles developing. Politically, the Chinese population's propensity towards housing ownership, I think, exacerbated the situation. Rising property prices does expose the country and the government to some social unrest, which is the last thing the Beijing government wants. That's why the government has implemented some of the controlling mechanisms. But, from my perspective, I do not subscribe to the perception that there is a widespread real estate bubble in China. You have to look at the national supply-demand picture and the affordability picture. On the affordability front, if you plot out the price-to-income ratio for China and the major cities, you will see, it's mostly in the mid-single digit in that range, and more importantly, it has stayed flat over the last 10 years. That means, the increase in prices over the last 10 years have not made housing less affordable. The income has actually kept pace with the increases. I personally don't think there is a housing bubble in China in general.
John,
there might be some pockets of bubbles, but not in the whole country.
Not in the whole country. John, we have like 15, 30, or maybe 30 seconds left. How do we get a hold of you?
Well, you can go to our company's website to take a look at our company, which is ChinaOmei.com. I know it's a long name. It's China. Omei is spelled O-U-M-E-I. Real estate is one word.com. Or you can send me an email to my personal email account. You just add a "the" in front of Zhang Liang, so it's the Zhang Liang, TheJohnLiang @gmail.com, and I'd like to talk more.
Yes, and hopefully we'll have you again on the show maybe later on during the year. Is that all right? We'll give you a call back. Is that it?
It'll be my pleasure.
Good, thank you. That was John Liang. He's currently Chief Financial Officer of China Weimei Real Estate Inc. And I want to thank you. Thank you again. And
thank you, John.
And also want to thank Mr. Morris Guzman from National Bank Financial. Thanks
a lot, Sam.
Another great show.
It was a pleasure being on.
Good.
Thanks for having me.
Thank you for having me.
Yes.
It was a pleasure having you, John.
Yes, and we'll have another one too. And by the way, I just want to thank our listeners for listening. And we're getting into the 97, 98 show almost, right?
Yeah,
we're almost getting to 100.
Approaching that century mark.
Exactly. So
my name is Samuel Izerza for the Money and Business Show, Radio Shalom, CJRS 1650 AM in Montreal. Happy capitalism and God bless you.
Shalom AM, money and business. Sam Izerza, let's get 'em. Oh, it won't be long before that money hits you. You reach a certain point where that money is an issue. Tax cut, inflation, learn about investment. Shoot another perfect show that can help them. Shalom AM, I'll be tuning in live. Sam Izerza, got the advice for you and I. Kick your feet up, listen to the speaker. Got questions, no sweat, take that number. It's real easy, it's 514-738-4100. Get connected, hit that extension at 200. Money and business, that's what I'm talking about. Money, money and business.
The opinion expressed on this program, Money and Business, are those of the host and his guests, are not necessarily reflect the opinion of Radio Shalom. Please read the prospectus before investing in mutual funds and consult with your financial advisor.